So, you think you want to be a venture capitalist, but do you have the qualifications that you need to be a good one? Today, we're going to talk about what those qualifications are, how to develop those qualifications, and which order to develop them in first. Okay, so first of all, what is a venture capitalist? Because we should get on the same page about what we mean by that. Because, some people look at like the sharks on Shark Tank and think that's a venture capitalist. Not really a venture capitalist. Some people think it's like, their rich neighbor up the road that has thrown some money into some stuff here and there. Not really a venture capitalist. Some people, they think it's, I've seen people refer to themselves as venture capitalists when they're investing in real estate, when they're investing in, public stocks. I've seen people think that they're investors in venture capital when they invest in like a few random side hustles or side businesses. None of that is venture capital, at least the way it's generally understood in the industry. Venture capital is, from an investment perspective, making investments using other people's money into early stage companies, startups, that have the potential to become huge businesses someday. Now, what that means is that these startups usually are going to fail, or they're not, they're never going to achieve that huge, massive outcome. But when they do, it can be absolutely like mind-bending, the types of returns. I mean, you look at funds like Haystack Ventures, that was an early investor in companies like Instacart and have returned 30, 40 times their entire fund back to investors, which means if you put $1 into their fund, you're going to get like 20 to 40 of those dollars back, despite the fact that very few of the investments that they actually made in that fund are generating the return. But those are generating such a huge return, like Instacart, that you as an investor in the fund generate a huge return. That's what venture capital is all about. It's making these early stage investments, and it's using other people's money. So as a venture capitalist, you get scale, you get leverage by going out to other investors, pooling their money together, and then making a bunch of bets. And so instead of as like an institution or a high net worth individual, trying to like pick the right companies to invest in, you invest in a venture capitalist who this is all they do day in, day out. And they hopefully have some really good expertise around identifying the right companies, supporting those companies, and achieving like a great outcome at the end. So what does this mean if you want to be a venture capitalist? What are the skills you have to develop? Well, as I talked about, it's investing in early stage companies that have the potential to become really big someday, and it's investing in those companies using other people's money. So in my mind, there are 3 things that you have to do to be a successful venture capitalist. And really, you only have to be world class at 2 of the 3. You have to be good at all 3, but you have to be world class at least 2 of them. And when I say world class, I mean world class. Like, you can't just be like pretty good at it. You got to be really good at it. But here's the thing. If you are world class at 2 of the 3, then you will be one of the most successful venture capitalists that, the world has ever seen. So let's talk about those 3 skills. So the first skill is being able to pick the winners. So really that comes down to really understanding like trends, being able to kind of predict the future, being able to do your due diligence and avoid huge pitfalls. It's all of the things around picking winners. And really that's all inclusive, right? Like I said, it's kind of seeing what the future looks like and knowing that the company that you're investing in today has the potential to really shape what that future looks like and obtain large market share in that market. It's also understanding like the dynamics on the management team and really understanding the founder and his or her psychology and what's going to make them to be a really great founder and really, run through walls or close sales or hire key employees or whatever it is that they need to do in order to be successful. It's also like digging in and understanding what the competitive landscape looks like and the market size and the market dynamics and understanding the financials and the business model. And are they going to be able to raise more money from other investors and so on and so forth. The list goes on and on and on. It's all about due diligence, picking the winners. And the reality is there are a lot of great resources. If you're not already watching my YouTube channel, check out my YouTube videos because I cover a lot of these basics of like how to analyze a market and how to read a term sheet and what is a pro rata right and like how to assess management teams and so on and so forth. And that can be really helpful for that. And then you can also go out and you can start investing. There are a lot of great investment platforms like WeFunder and others where you can start putting your money where your mouth is. I mean, from my perspective, the feedback loop for actually putting down your own money is some of the best, because all of a sudden it goes from theoretical and hypothetical to real world. And you can start internalizing those lessons real fast when it's your own money on the line. It's not all just about picking the winners. If all you had to do was pick the winners and nothing else really mattered, then frankly, two things would be true. One, this wouldn't be that hard of a job. It would still be challenging, but not that hard. And two, because it wouldn't be that hard, everybody would do it, and so it'd be hard to generate like a really great return. That leads us to the next skill that you really need to develop. And that skill is getting access to those deals. So if you think about Uber, for example, a lot of people knew that Uber had a high degree of likelihood of being successful at the early stages of the business, right? They could see the vision and how big the company could grow and all of these things. And so there were a lot of people trying to invest in Uber because it felt like almost like a sure thing. But it was really hard to get a piece of Uber. And that's the case with most of these companies. By a lot of them, people can look at them and say, wow, this is an exceptional founder chasing after a huge market and solving it in a unique way that really solves a pain point for the people and the customers in that market. This is a great investment. I want to invest. When that's the case, there's typically lots of venture funds that will chase after that deal and try to get it, to get access to it, right? It's kind of like dating, right? Everyone's kind of chases after the hot girl or guy, right? And they got a lot of demand, a lot of offers. As a venture capitalist, you have to be able to win that deal. And there are a lot of different ways in which you can win the deal. Sometimes it's through relationships, just by being a good person and being the kind of person that an entrepreneur can trust and wants to have on their board, and they feel like can bring real strategic value based on their experience and so forth. Sometimes it's the brand. So if you're Sequoia, you're Excel, you're Andreessen Horowitz, when you invest in a company, you pretty much guarantee that they're going to be able to raise their next round of funding, that it'll be easier for them to hire more employees, et cetera, just because the brand is that strong. So Sequoia and Andreessen are able to get really good access to some great deals. It may be that you have a better sourcing engine. You're able to find those diamonds in the rough and convince the entrepreneur to take your money because the Sequoias don't even know they exist yet, right? There could be a lot of different strategies, but at the end of the day, you got to figure out how you get in to the deal and what that strategy looks like. And really, at the end of the day, that's going to boil down to your network and your interpersonal skills. Venture capital is very much a networking game at the end of the day. I mean, if you think about like getting into the deal, one, you got to know the deal even exists. And two, you got to convince the founder to get in. And once you have that right to get into the deal, you also need to do your due diligence to make sure you're making a good decision. Because sometimes when you look at FTX had so much demand for their stock that Chamath over at Social Capital, he went to them and said, hey, look, I think the business is interesting. We're interested in investing, but, it'd be really good if you had some governance and a board. And they had so much demand for the stock that the CEO there, Sam, he told them to F off, right? He's like, I don't even want to talk to you if you're going to talk about a board, right? And so all the investors were like piling in money. They got access. What they didn't get, what they didn't do was their due diligence, right? So that's why those two are really important. Now, the third one is this idea of investing other people's money. And that's all about fundraising. So you've got to go out and you've got to convince investors to invest in you as a venture capitalist, invest in your fund, so that you have the capital to then deploy into these companies. And that's important because it kind of plays off the other two. If you're going to invest at the Series A stage, well, most of those companies are going to need somewhere between $5 and $15 million of funding. And unless you have a huge personal balance sheet, which is, you'd probably need to have about $1 billion plus of personal wealth in order to do this successfully as an individual. Unless you're going to do that, you really, as a venture capitalist, need to raise somewhere between $200 and $300 million in order to play that game where you're investing $5 to $15 million checks. And that can be really hard for most individuals. So what do? They go and they raise money from a bunch of investors to build that fund. Fundraising as a venture capitalist, I will not lie, is super challenging. I mean, you see the headlines all the time, and it's, like XYZ fund, raised 100 million or 50 million or $1 billion, or Tiger raised $8 billion or whatever it is. And it just sounds like it's super easy. But here's the reality. For every single one fund that actually is successful in raising money, there's probably at least 100 or more that never raise a fund, that are out there, pounding the same pavement, trying to raise capital from investors. And here's one of the dirty secrets. Fundraising is like sales. It's not always the best product that wins when it comes to sales. It's, in many cases, whoever is the best salesperson, right? I think a good example of that is Andreessen Horowitz. In the early days, Andreessen was very good at fundraising. And part of the reason for that was because investors looked at Andreessen and said, hey, we think Andreessen has the potential to be the next big cornerstone marquee brand in Silicon Valley, but they're brand new. And so now's our chance to get in. Because Mark Andreessen's got this huge name, huge brand in Silicon Valley. And we love the vision of what they're doing. We're going to invest. And so they were able to raise their fund very successfully based on that strategy. But then the Wall Street Journal came out a few years later and showed their returns, and the returns were not that great. So you could argue they weren't doing a great job on the investment side, right? Criteria skill. Now today that's changed, and they're doing much better from a fund performance perspective. But you know what? That mediocre fund performance years ago didn't hurt them in the least when it came to fundraising. They've gone on to raise billions and billions of dollars, and now they employ more people as a fund than I think any other venture fund, and in fact, more than a lot of funds combined. So they've clearly been successful because they're really good at fundraising. They know what they're doing there. And I could name a bunch of other funds that are good at that as well. So just to recap, you got to be good at picking deals, you got to be good at sourcing those deals, getting access to them, and you got to be good at fundraising and convincing others to invest in your fund. If you're brand new in your career, where should you spend your time focusing? Well, I would focus on two things. One, build your network. Your network is your net worth, as it's commonly said. But in no industry is that more true than in venture capital. Your network is you just depend on your network for everything, whether it's finding deals, finding investors, supporting your portfolio companies, getting companies to exit, finding employees for those companies, everything. Just build your network with as many people as you can that kind of touch venture capital, whether they could be potential future investors, where they could be in your fund, whether they're entrepreneurs that you would eventually want to invest in, whether they're potential employees that you might want to bring into your portfolio companies at some point. Your network is key. And I would work on that day one right away. But the other thing that I would spend a lot of time on is really the due diligence side of venture investing, especially if you're young. That will build your foundation on which you can build over time. I know a lot of people, having worked in this industry now for a decade and a half, that have incredible networks, but they aren't very savvy when it comes to actually making investments. And they don't get treated with the level of respect and seriousness that perhaps they could if they had better investment chops. So while you're young, especially if you're in college and stuff, look for opportunities, watch my YouTube videos, do internships, read books, read blogs, listen to podcasts, whatever it is, to start building that skill set and that knowledge and awareness so that you can build kind of that diligence skill set. All right, if that was interesting and helpful and you're still interested in working in venture capital, check out my video, How to Get a Job in Venture Capital Without Any Experience.